Yeah. Yeah. So, all right. What's I mean, Tesla, as we're talking, it's a really good day for Tesla. I mean, it's reaching new highs, 195.75. So we're back close to $200 territory. I mean, what's the big deal with Tesla right now? I mean, it seems like we had great insurance, weekly insurance registration numbers. And by the way, everyone who has questions, feel free to put their questions in the YouTube chat. That we have several hundred people on YouTube channel, and if you're on Twitter Spaces, then just reply in the Twitter thread with a question. We have Alec behind the scenes tracking some questions. We'll get to in a little bit. But for Tesla, we'll move on to talk about Tesla here. I mean, the insurance registrations, a new weekly high since like last year. They haven't had this kind of high in a while. It's like this March could be a record March.
Yeah. So it was 18,000 registrations this week. It was 17,000 last week, which was a really good number. I think the last couple weeks before that, they'd been in the, like 10 to 11,000 range. So a really significant uptick in the fact that it's been at least sustained now for a second week is really good news. Yeah, I mean, that was something we've been talking about for a long time, that, the China numbers just looked relatively weak. And we were saying a while ago that they seem to conflict with what Tom Zhu said at Investor Day, that they've got way more orders than they can, well, not way more, but more orders than they can produce out of the Shanghai facility. So, I think there's, we're getting more and more reasons to believe that, Tom's view was obviously correct. And so could be shaping up for a pretty strong quarter, stronger than maybe we were even expecting in terms of deliveries. Yeah. So the push seems to be real. I have seen inventory numbers in the US seem to be increasing, but that's kind of what you would expect as we approach the end of a quarter. And you've got the delivery wave. It's not the crazy delivery wave it used to be, but it still will always make sense to kind of focus somewhat more in the third month of the quarter on local deliveries. And so that's what we're seeing both in China and in the US. But European inventories are kind of steadily decreasing. And I would not be surprised if we have a really strong kind of push both in the US and China in this last, week and a half or so of the month.
Yeah. I mean, on one hand, Tesla's always, I feel like every quarter they try to reiterate, we're not going to do the end of quarter push anymore. But here we are again, end of quarter, last few weeks. There's certainly a big push, a record push in China and Europe, apparently. So what's up with that? What do you think? I mean, why can't they get out of this quarterly push? I mean, I see Farzad in the comments. Farzad, I know you probably have some ideas there, but working there in the past, how you doing, Farzad? We'll talk. Get to your question. That's a good question about the Ford Explorer EV. But why can't they get out of this end of quarter push? What's keeping them at it when they keep every other quarter they vocally say we're not going to be doing that anymore? We're not going to be doing that. And it seemed like the third or fourth quarter they tried to limit it, but here we are again.
Yeah. So I think getting rid of the end of quarter push, it's a matter of magnitude. It's not like they're gonna like have completely equal distribution of like vehicles to all geographies on like a constant basis. And even in the last couple of quarters, like we saw a little bit of a push, but when you look at the overall results, there was a huge inventory build over the last 2 quarters, which is what you would expect if they're kind of deprioritizing the maximum end of quarter push to get as many possible deliveries out at the end of the quarter as you can. So, what I think they're doing, and this is kind of what they were talking about in Q3, or maybe it was even Q2 of last year, where Elon said, we're going to prioritize minimizing costs. So like not paying for expedited logistics or, very expensive freight to hit a certain delivery number, and not working like extreme overtime the last, 10 days of a quarter in order to get every single possible car off the line and into customer hands as you can. So I think what they're doing is like, it still makes sense, I think, to take your first month and a half of, Shanghai production and ship that to Europe, and to have like the remaining production be more focused on the local economy. To me, that just makes sense. Otherwise, you're going to have like a huge disruption and kind of a huge miss in one quarter. But you do that in such a way where you're not like trying to jam as many possible and paying extreme costs in order to do that. You're trying to minimize your delivery costs. So I think it is just they're tampering down on the costs associated with doing that, more so than they're not going to prioritize longer distances early in the quarter and shorter distances at the end of the quarter. But I don't know. What do you think, Emmett?
Yeah, I mean, I think, well, as far as I was saying, old habits die hard. They can't help themselves. I think it'll take time to really eliminate the push 100%. It'll be a 69% push versus previous quarters and going back over time. He also said Q4 2021, they didn't do the end of quarter delivery wave, and it blew everyone's mind. I have to think back to Q4 2021, um, what the numbers were. But yeah, I mean, I think you're right. Old habits die hard. That seems to sum it up right there. It's just like they have a whole process in place they've had for years, literally years, of how they do things. And to get the whole company, 100,000 plus employees, I don't know what percentage of those are involved in logistics and deliveries and customer service orientation to new cars, large. But to get that whole infrastructure, that whole employee base, that whole, Tesla has like its own legacy system of doing things now because it's been around for 15, 20 years delivering 10 years delivering Model S's, at least, 7 years now delivering Model 3s. So to get rid of that kind of legacy systematic way of doing things and replace it with like, okay, now we're going to do it, that's probably very hard to do. So they probably aspirationally want to do it, but it's probably a Herculean task internally within Tesla to make that actually happen. And maybe that's just not their top priority right now. Maybe they're just going to continue to have these end of quarter delivery waves. And I know there was in China, there was like discussion. I think it was like Troy Teslike was the one speculated on this that I saw it from, that, there's only a certain amount of chips that can actually come in and out of the Shanghai port. But didn't they talk about that in the investor day, that it's not a problem? They can get more shit. I don't know. I feel like there was some recent interview or content I saw. I thought it was investor day. It might've been something shortly around thereafter, but I thought there was reference that like, we'll just have more ships if we need to out of Shanghai because we're going to have another factory there or something like that. Right.
So I don't recall that last part of it, but I know they definitely did say that like the shipping constraints were an issue. But I think he was saying that, Zach was saying that in the context of like spreading your deliveries out a little bit more is a way to kind of alleviate that issue. So it's definitely, like an issue, but, I think at the same time, like last year in particular, they were kind of getting squeezed on commodity prices and margins, were especially in Q3 and Q4, I think were lower than people were expecting, at least that the bulls were expecting. So, I think they were kind of looking at, estimates for earnings and kind of seeing that, they're probably not going to hit those numbers. And so I think with all the cost pressure that they were seeing, from all the commodity inflation and like wage inflation and everything else, they were probably thinking they need to really focus on, the like logistics cost. Cause that's a pretty significant portion of the overall cost of the vehicle. So if you can get that down from, I don't know, say 2,000 to 1,000 just by not expediting things, that's very meaniful margin impact.
Yeah. I see Moon in the YouTube comments saying first it was chips, now it's ships. Kind of funny.
Good comment. I like that.
Yeah. And Brian Wang, who we've interviewed in the past, who's really, futuristic thinking and studies Tesla very closely, as close as anyone I know. Probably more bullish than anyone I know as well. So, but studies him closely. He says there are other ports a few hundred miles away from the Shanghai port. So he doesn't get the congestion concern either. So yeah, if there's other ports they can go to and, they have to use trucks to get them there a couple hundred miles away, it's not the end of the world, not a huge deal, I guess. Right. So, and we talked to sorry, go on, Matt.
I was just going to say, like, with that Troy thing, I love the work that Troy does, but sometimes he makes these assertions of, something like the ship constraints as like a fact. And I'm like, that might be a fact, but like, where are you getting the data from? And so
just because they've never done it before, he thought it was like a constraint. Doesn't mean it's a constraint though. Yeah.
So you and I like to think kind of probabilistically, and it's like, oh, what would it take to get more ships in there? And sometimes he comes in with these kind of very black and white statements that are kind of hard to read. Is this actually a fact, or is this just kind of your view? And it's hard to distinguish between those sometimes.
Yeah, I mean, there's not just him. There's a lot of people that seem to be thinking that the ship constraint was real, and that for that reason they can't do the delivery wave in China and keep growing, or out of China and keep growing, because they simply can't export any more cars out of China than they already have been, per quarter. to keep that delivery wave going. So and another concern we've had is like just China economy in general. Like, these latest weekly insurance numbers that we've been getting that are records, above expectations. It's good news because we've all been concerned about the Chinese economy. And we talked to our source on the ground in mainland China that February was a little weaker because it was the first month in, first holiday in a few
Spring
years where
Festival
everyone,
in 3
spring
years, I
festival, that
think.
everyone could travel
Yeah.
back home. So there was less people actually going to showrooms and buying cars and taking delivery of cars than normal. And so it seems to be playing out with insurance numbers bouncing back for March. But we also just got to, talk to him briefly, or got another update. And, the Chinese economy, he thinks that the Chinese government, the attitude is really improving towards kind of hard tech. Like, we make the distinction between soft technology and hard technology, like digital stuff, software stuff, versus like building chips or building cars. And he's basically saying the Chinese government is really trying to position, with some recent policy changes. And even at the local levels, you see a lot of subsidies coming in for EVs, like all over the place at the local levels in China right now. Maybe there's not a national CCP and subsidy like there used to be, but locally it's being made up for. But he's seeing like a trend in the Chinese government policy making right now that they're really trying to put a focus on hard technology now, and take the focus off of soft technology, so that the EV industry. He thinks that's very positive for the EV industry in China. So that's a good sign
Yeah.
if that's true. Yeah.
Yeah, I mean, it's, especially in the wake of some of the news that we've seen recently, with BYD being reported to be bringing a lot of their production down to just 3 days a week at several plants. That's a rumor that was going around just yesterday. And obviously, the anyone who's tracking the kind of overall EV market in China is aware that it's been very, very soft this quarter.
Yeah.
And economic weakness is very real. But yeah, what this source on the ground is saying is that the government is very well aware of that fact, and their point of view is the Baidus and TikToks of the world are much less important to China's long-term prosperity than their EV manufacturers in hard tech, like you said. So it seems at least this one source is essentially saying that he believes that there's going to be a kind of policy pivot which will ensure the continued growth and prosperity of these EV companies, Tesla included, because that's more of a priority than the the kind of soft tech businesses. So that could be very good news going forward too. And I think it's important to keep in mind. I mean, even if we're talking about like maybe 430,000 deliveries, and that's not that great when you compare to Q4 and maybe what we were expecting a year ago. But you did have pretty meaningful shutdown and demand issues just with Chinese New Year and then the Spring Festival, which are not going to repeat in Q2. And so if we don't have a COVID shutdown again in Q2, we might finally be the first, Q2 or really just quarter in general in a long time where we've got like really meaningful increase in like Fremont and Shanghai running at full production, and Berlin and Austin continuing to ramp. We might be on the verge of some pretty meaningful growth in production right now. So it's pretty exciting.
Yeah, exciting. So Tesla China, that should be at the top of everyone's mind. We try to talk about it whenever we have information about that, because China is quickly becoming the biggest economy in the world. If it's not already, I think it already is. Maybe, I don't know, but it's going to be the biggest EV consumer in the world very shortly. If it already, it already is. It already is by a long shot, but it's going to continue to be the bigger and bigger one. And Tesla China, I think, will be the biggest. It has potential to be bigger than anywhere else for Tesla if it isn't already. I mean, it just seems like, why wouldn't you talk about everything related to Tesla China? We talk about Tesla in the US like crazy, and that's because we're located in the US. We have tons of news and information about the Tesla in the US, but we should be spending as much equivalent amount of time on Tesla China specifics. So whatever information or signal we can come across for Tesla China, we will certainly try to bring it up as we can.
Yep.
So full self-driving beta 11, it seems like everyone's gotten it except me and you, Matt, but everyone loves it. Everyone loves it so far.
Yeah,
it's exciting. As I can't wait to get it and start using it because I got my 5 strikes on my Model S. So I think when you get the new version, you get reset. So I can start using my FSD Beta
Oh, is
again
that
on my
right?
Model
Oh, I didn't
S.
know
Yeah.
that.
Yeah. I've been using because on like a long 3-hour drive, I end up like, I put it on autopilot on the highway or whatever, and probably on average every like 20 minutes I'll get like a little dink, like ding 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 ding. Like, oh gosh, I looked up to the screen, or I looked at my phone for a second on autopilot to see who texted me. Things you're not really supposed to do, but it like the camera detects you like pretty quickly and easily,
Yeah.
especially if I'm not wearing sunglasses, which I haven't been a lot lately. So, um, normally I can get any drive with like just 1 or 2 dings, worst case, if any. But in the last couple of months, I had like a few 3 or 4 hour drives, like to go somewhere in the South Bay or whatever, and I'd be on the highway a lot of the time, and then I ended up, before I knew it, having 5 dings, and it's like, oh, you got too many dings for this drive. Keys, I'm like, crap, and I already had like 3 strikes, and so I
Oh,
got like
geez.
my other 2 strikes in the last couple months, and it just I was unfortunate. So
Yeah,
hopefully
I
I'll be
actually
reset
haven't gotten
soon.
a strike yet. Although the Mr. Green guy's got 2 strikes on my car, so if I get in trouble, I'm going to blame them.
Well, it's supposed to reset when you get it. If anyone in the
Yeah,
comments
it should
knows
be
the rule
fine.
on that, I think it's, if anyone's gotten it, I think you get it reset. Farzad said he doesn't have the new version either. So, okay, we're not alone. Maybe just some of us, they haven't decided we're not safe enough to give us the new FSD 11 yet.
Farzad also
But
says he's sick of looking at my stupid face in high definition. So yeah, maybe I should switch my internet back for the good of everyone.
yeah, yeah. Um, so I mean, it seems like it's a step change. It's like we were afraid that it'd be like one step back for the new
Yeah,
stack, the single stack, and then we'd have, start iterating from there. But it seems like it's a step forward, and a new stack infrastructure or architecture that they can build off of to iterate faster from here. So I'm very bullish. I mean, this is the most bullish I've been on FSD Beta since the very beginning, I feel like, right? Or there was like one
yeah,
step change. There was, maybe 6 months in or a year in watching the videos where I felt like it made a big improvement. But this seems to be a big improvement from watching a lot of videos, Chuck Cook's videos, Dirty Tesla's video. I've seen a few different
yeah,
videos I've been watching, and even people that have been skeptical. Um, so this could be the beginnings of a higher adoption rate later this year in FSD Beta, and that's a huge, you know, uh, plus for the stock price and margins. It could
yeah.
discount. It'll discount the margins they took hits on by lowering prices without advertising, for example.
Yeah. Yeah. And I mean, if that happens, I mean, that has massive transformational power for Tesla's financials. And this is something that we've been watching for a while. Obviously, the FSD beta rollouts have been a lot slower than we would have expected, 2 or 3 years ago. But, the issues are real. And I think the worst thing that Tesla could have done is to roll it out too aggressively and then get in an accident, or, God forbid somebody dies, and, then the Dano Dowds of the world, are just trying to get it canceled, and they've got,
Yeah.
more rationale behind that. So I think it's really good that they're really kind of tightly limiting the rollout of it as much as they have so far. But when I'm going to get incredibly like bullish, I'm going to like probably be on the edge of my seat is whenever they feel confident enough to do like a free trial to people, because it is a little bit of a learning curve. I mean, the
Hmm.
behavior, it's hard to predict. At least when I first got it, it was like, what is it doing right now? And you don't know
Yeah.
exactly when you can trust it and when you can't. And it's like, I could see if somebody gets that and they just assume that it's going to act perfectly and it doesn't, then, that could be a situation where, you get more accidents. So, but I think the system, it never, like I used maybe a year and a half ago, it would somewhat routinely, at least for me, put me in situations that were, a safety risk if I didn't intervene. And that just doesn't happen anymore. So I shouldn't say never, but it's very unusual when that does happen. So
Hmm.
when it gets to the point where that's very widely applicable across the whole fleet, where maybe the only issues are it's acting a little bit like a jerk or going too slow. That's still safe enough to roll out to more people, and so when they get to the point where they can do that and people get a taste for it, then I think you're going to have a huge change in, maybe not a huge change, but a notable change in kind of take rate, which will be really beneficial for financials.
Yeah, absolutely. Um, so Deliveries, we think, I guess the consensus is around 420,000, 430,000, somewhere in
Yep.
that range. We still got another week or so left, 10 days left of the quarter here. So more information to come, but are you with consensus, or are you higher or lower? What's your speculation, Matt? And then people in the crowd, next week we'll try to, even though we don't have the final number, we'll have a more clear estimate of what we think the crowd that follows us has, and maybe we can do a preview of what earnings might be for the quarter with that estimate in mind. So what's your kind of predictive estimate here, Matt?
Yeah, I think last week when we were talking about this, or maybe it was 2 weeks ago, I was thinking maybe 425, and I think you were at 430. Based on what I'm seeing so far, I'm probably more in the 430 camp now. But it wouldn't surprise me. Like I would say I don't know, 75% confidence interval is maybe 415 to 445, something like that.
Mm. Yeah, mine is my 75% confidence interval is 420 to 445.
Okay. All right. So we're
So
pretty close there.
pretty close. So 435 is my median, maybe something like that. I don't know, or 432 or whatever. I don't know. So we'll see what people in the comments. I see D Murik says 420. Yeah, so we'll see. We'll look at the comments later, and people who watch this after the fact can put in the comments on YouTube. We'll look. Martin Muldoon says 440. So we'll just kind of try to figure out what the average or the mean is for most people that are not, complete outliers. Like anyone that says like 500,000 or 350, we'll just take that out of the data. But everyone else will try to put into like a little bell curve and figure out what the average is, and maybe do just an earnings preview next week on that.